if you give me just a few minutes, you'll be able to use the smartest indicators ever made, one that doesn't just show you where the market's going, but exactly how strong that move is, and when the market's not trending at all, with amazing accuracy. I'm going to quickly show you how to get the indicator, explain all of its features, walk you through the settings, and then break down a powerful trading strategy for both buy and sell setups with trade examples. So don't miss a second, because if you understand this properly, you'll be able to catch clean, high-conviction trends with way more confidence. Let's quickly add the indicator to the trading chart. I'm going to be using TradingView throughout the video. I have a GBP USD trading chart open on a 1-hour time frame. First, let's add it to the chart. Click on Indicators at the top and type in Trend Classifier. You'll see the one created by ChartPrime. This is the one you want. Click to add it and it will show on your trading chart. So what exactly are you looking at here? At first glance, you'll notice these colorful trend bands wrapping around price. When the bands are blue, that means we're in an uptrend. When they turn red, that means we're in a downtrend. But that's just the beginning. The real power of this tool is in how it breaks trends down into different phases, so you can understand not just direction, but how much force is behind the move. Right next to some of the candles, you'll see numbers 1, 2, or 3. These are your trend strength phases. A number 1 means the trend is starting or weak. This is the early stage. A 2 means it's picking up strength. And a 3? That's when the big money steps in. This is the strong, confirmed trend phase where major moves usually happen. So instead of guessing whether a trend is worth jumping into, you can visually see the strength develop. Now there's one more key visual cue: the candle colors. You'll see green candles in an uptrend and red in a downtrend. But there's also a third color: orange. These orange candles are super important. They mark consolidation zones or range-bound movement. When you see these, it means the market isn't trending clearly. It's your warning sign to either stay out or switch to a range strategy. Let's also talk about the built-in dashboard. In the top right corner of your chart, you'll see a little box showing bull strength and bear strength on a scale from 0 to 3. This is a quick summary of which side is currently stronger and by how much. If both bull and bear strength are 0, the market is most likely ranging. If bull strength is high and bear strength is low, you're in a strong uptrend. This tiny feature gives you a fast read on momentum at a glance. Now let's look at the settings. You don't need to overcomplicate this part, but it's important to understand how it works.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
The main setting is called length. This adjusts how sensitive the indicator is to price movements. If you're a short-term trader, scalping or trading on the 5-minute or 15-minute chart, you can reduce the length to make the indicator more responsive. This gives you faster trend signals. But if you're swing trading on the 1-hour, 4-hour, or daily chart, you'll want to increase the length to smooth things out and focus on bigger, cleaner moves. So basically, lower length, faster signals with more noise. Higher length, slower signals with better quality. Just adjust this based on your trading time frame. All right, now let's break down a complete trading strategy you can use with this indicator. Starting with a buy setup. Here's what you're looking for. First, the bands should be colored blue, and price should be consistently trading above most of the band area. This confirms we're in a bullish environment. Next, we want to wait for a pullback. That's when price temporarily drops and touches or dips below the center line of the trend band. During this pullback, you'll usually see orange candles appear, signaling that the trend has paused or weakened. This is normal. You don't enter yet. Now we wait for the trigger candle. You want a green candle that closes back above the center trend line. This is our early entry signal that the pullback might be over. But before you enter the trade, there's one last check. You need to look at the dashboard and confirm that bull strength is at least 1. If it's 0, it means there's no momentum backing the trend. But if it's 1 or higher, it confirms bullish energy is returning. Once all these conditions are met, You can enter your buy trade. You can place your stop loss below the most recent swing low or under the lower band. For your take profit, aim for 1.5 times your risk or let it run depending on your style. The strategy is really simple and can make you amazing profits. Here's another quick example. Price was moving up with blue bands and steady green candles. Then we saw a minor dip. A few orange candles appeared as price dipped below the center band. But soon after, we got a strong green candle closing above the center line. And the dashboard showed a good bullish strength in the market. This confirmed momentum was coming back. So we can open a buy position on the next candle. The stop loss can be placed below the swing low. As you can see, this strategy gives pretty amazing signals. Now let's go through a sell trade setup. Just flip the conditions. You want to see red bands with price trading below most of the band structure. That tells us we're in a bearish environment. Then we wait for a pullback where price comes up and touches or briefly closes above the central band line. Orange candles will usually appear here. We don't act just yet. Then we wait for a red candle that closes back under the center trend line. That's our trigger candle. Before entering, check the dashboard. The bearish strength should be at least 1. If everything lines up, you enter the sell position on the next candle. Stop loss goes above the recent swing high or above the top trend band. And your takeaway should again aim for 1.5 R or more depending on the move. Make sure to try out this strategy and share your thoughts in the comments. Here's another example. Market was in a strong downtrend, red bands, consistent red candles. Price pulled up briefly, turned orange for a couple of candles, then we got a strong red candle closing back below the center band. Bearish strength was also good. That was our signal. So we can enter a sell trade here. We can place our stop loss above the swing high. Now, before we wrap this up, let me leave you with one important point. This indicator gives you structure, but like any trend-based tool, it will give false signals in ranging markets. That's why you need to respect those orange candles. If you see orange everywhere and both bullish and bearish strengths are 0, the market's not trending and you should wait. Trying to force trades in those conditions is a fast way to rack up losses. If you found value in this breakdown, please leave a like, it really helps. And if you want more powerful indicator-based strategies like this, make sure to subscribe so you don't miss the next one. Thanks for watching the video. Till the end, I'll see you guys in the next video.